Shalom everyone, you're watching a new episode of the Economicon and I'm Rami Zaitson, your personal economist. Seems like everyone is familiar with the subject in question, so everyone should know what it is and how it works. Is there something new, relevant or interesting going on? You will know after watching my new video, Bank Deposits, narrated by Rami Zaitson. A bank deposit, or a deposit account, is basically an account opened at the bank of your choice where you pack your cash and earn interest on it. A deposit, in fact, in an investment vehicle. With a view to save or earn some extra cash, consumers come to a bank, choose a deposit plan that suits their needs and place their money with the bank. The bank, in its turn, opens a special account that it keeps the cash deposited by the consumers and pays interest on the principal. Many of you may wonder about the sources of the extra cash they gain. In fact, by depositing your cash, you give the bank your permission to utilize the funds. This isn't usually included in your deposit agreement. However, the bank can loan your funds or use them to their liking. Of course, this is a simplified explanation of the process, but anyways, in the end you'll be paid back your principal with the interest secured. And this is a win-win situation. Why? You'll find it out by the end of this video. The procedure of opening a deposit account and the respective terms and conditions are written into a deposit agreement. Let's say you can open an interest-bearing deposit account with an annual interest rate of 3% paid at maturity. This means that by placing $1,000 for a year, you will eventually have $1,030. This investment vehicle is quite simple per se. However, there are various types of bank deposits. You can choose a currency of your deposit account. US dollars and euros are standard deposit currencies offered virtually by all banks. Pounds are less common. You can open a yen account by visiting a local office of the People's Bank of China, if there is one in your location. You can show up at the bank with your home currency and convert it into a currency of interest there. Or you can buy the desired currency somewhere else at a better exchange rate and then bring it to your bank. You can also open a multi-currency deposit account, which is basically a set of accounts in different currencies. You can add money to one, two or all of your accounts at once, and the interest will accrue of all deposit accounts. This type of bank deposit allows you to earn on currency conversions. For example, you have US dollars on your account, but you speculate that British pounds will go up in value. You can log in your account on your bank's website and transfer dollars to your pounds account where they will be converted at the current exchange rate. At this point, accrual of interest on your USD account stops and started on your pounds account. This transaction can be done as many times as you like. Term and maturity. Fixed-term deposit accounts can be opened for a period of 1, 3, 6, 12, 24, 36 months and even for 5 years. Usually, the longer the time to maturity, the higher the interest rate. At maturity, you have an option to automatically renew your account for the same period. However, amended terms and conditions can apply. This is reflected in your deposit agreement. The renewed account may offer the same lower rate or interest of the be renewed at the effective interest rate of the bank at the time. So, you have to ask what interest rate will apply if you leave your deposit with the bank as it is. Different types of deposit accounts offer different interest payment mechanisms. Payment of interest at maturity is a common thing. You turn up the bank, sign up agreement, part with your money, and that is that. A year later, you receive the interest. However, you should understand that if you withdraw your money permanently, you lose your interest. But there are better options, such as monthly interest accrual. By placing your money on this type of deposit account, you will receive interest every month. It can be transferred to a separate account associated with the free of charge bank card, or it can be added up to a deposit account, this increasing the deposit amount and the interest paid as the principal grows. Deposits can also offer compounded interest. If closed before maturity, such accounts allow a withdrawal both of principal and the interest accrued to the date. Though interest rates on such account are generally lower than on the accounts that they pay interest at the end of the term. In an attempt to entice the customers, banks often cheat. They promise a higher interest rate than are actually paid. Let's say the XYZ bank advertises 18% interest rate a year on their deposits. However, the real interest rate, and you'll see it in deposit agreement, may be split into a period like 5% annually for the first 6 months, 4% annually for the next 5 months, and 18% annually for the last month. But they surely place the largest amount on the ads. And innocent customers run through deal live to open an account with an 18% interest rate, though in fact they get only 5.6% annually. Stay alert and focused. Read the damn paper carefully, provided that it's usually no more than page long. On occasions, banks issue special offers. Usually their offers are limited to certain seasons or holidays like the Independence Days, Easter or Hanukkah. By rolling out limited offers, banks are trying to attract more money, and by seizing these opportunities, customers can invest their money at a higher interest rate. But don't forget that you can take advantage of such offers only within a limited period. For instance, during Christmas holidays. The good news is that you secure your high interest rate for the entire term of the deposit. Such accounts can have other interesting options. For example, you can add funds to account during the term. A bank deposit is a secure way of keeping your savings and receiving a guaranteed income. Safety of your cash and guaranteed interest payments are ensured by specialized institutions opening in each country, like a Federal Deposit Insurance Corporation in the United States and the Central Bank in Russia. That means that if a bank loses its license or goes bankrupt, you'll pay back your money anyway, through only within the limits of the insured amount. With that said, if the license of your bank is revoked and your deposit hasn't matured yet, you will receive only the principal, because that's what was an account, which reasonably suggests that deposits with compounding interest that protects us from all potential advertisers, because both of the principal and the interest will be deposited on your account and paid back no matter what. Mind that this insurance covers only saving accounts. Be careful. Today banks offer a high interest rate on so-called investment deposit. For starters, there's not much investment instruments. Banks are simply trying to lure financial illiterate people in. What they offer is not a deposit, but a life insurance as an investment product. In one of my future videos, I'll tell you how people are forced to buy this product by banks. You're probably thinking right now, how am I supposed to find a reliable bank and choose a suitable deposit plan from gazillions of available options? The answer is Google. Type in compare saving accounts, and you'll be shown a number of free portals that aggregate the vast majority of banks' offers on deposit accounts. Pay attention to compounding clause, to the rating, but in general, if the amount of your deposit is within the insured limits and it provides for compounding interest, you can choose any bank you like. If you still have some questions, you can ask it right in comments. Thank you very much for watching me. Good luck and live a wealthy life. Rami.